The Lal Street remains jittery as US President Trump threatens higher tariffs on India for buying Russian oil. RBI status quo policy fails to lift sentiment. The Nifty ends below 24,600. Pharma, IT remain under pressure.
RBI's MPC votes to keep rates and stands unchanged even as it sees core inflation staying stubborn. The pause, however, is a relief for banks as it guards against any further pressure on margins, says SBI.
Britannia slips after a mixed Q1. Volumes grew double-digit. Margins and volumes missed the mark. Bajaj Auto fell despite an inline set. Realizations grew more than expected, but weak motorcycle sales were offset by strong growth in EV portfolio.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear you up for the next trading day. I'm Ekta Batra and with me is Reema Tendulkar. Well, Reema, it is the tariff jitters which continues to weigh on our markets and the RBI policy where, there was some view that maybe according to some it was a little hawkish at this point. But nonetheless, we had the Nifty which was down around 0.3%, but the broader markets really took the larger brunt of it and underperformed. So we had the advanced decline ratio, which was quite weak as well. All in all, a weak day of trade. Let's see what the headlines hold from the US in the next couple of hours.
Well, it's these export-oriented sectors which are, which felt the heat today. So Pharma was under pressure. The Nifty Pharma index down more than 2%. IT was weak. And on the flip side, some buying emerged in domestic stories. So even banks, for instance, the Nifty bank managed to close up in the green. In terms of the big losers, at least in the, on the large cap screen, we had cuts coming through on Britannia, Divi's Laboratory, Wipro, Sun Pharma, DLF, Tech Mahindra. These were under pressure. On the way up, buying seen in Asian Paints, HDFC Life and BEL. But let's talk about more movers and shakers. Hormus is now joining in. Hormus.
Well, the broader markets may have underperformed today, but there were a lot of double-digit gainers as well within the broader market. Some of them were earnings reactions, some of them were news flow driven as well, with names like Zinka Logistics, Transrail Lighting, all of them seeing double-digit gains today in today's session. And we'll start off with some earnings reactions, of course, with Carraro India ending 8% lower and continues to fall from its IPO price of over 700. Bharti Hexacom after the downgrade from CLSA. Morpen Labs came out with results just a few minutes earlier, that too ending with losses of around 6.5%. With some of the other movers in today's session, stocks that announced bonuses or supposed to announce bonuses as well. Nazara Technologies is going to consider a bonus as well as a stock split on the 12th. But the moment the news came out, the stock fell from the highs of the day. And Pidilite announced a bonus today. Sandur Manganese announced a bonus yesterday and it's building onto those gains today. And Godfrey Phillips, after the bonus issue, post its results, making yet another high, 10% higher on this stock today as well. Now, some of the other big names in today's session, a sector that was sulking today are pharma names. Doris Labs, Sun Pharma, all of them, most of the stocks on the Nifty Pharma Index too ending lower. What also did not do well today were the real estate names, the rate sensitives. After no rate cut coming in from the RBI, it was the real estate space that was sulking in today's session, be it the likes of DLF, Brigade, most of the constituents of the Nifty Realty Index too ending lower in today's session. Back to you guys.
Okay, all right, Hormuz. Thanks very much for that. So that's what took place in terms of stocks today. But let's go across to our guests now. We have Mayuresh Joshi joining in to talk about the fundamentals of the market and Shrikant Chouhan, who's joining in from Kotak Securities to talk about the technicals. Mayuresh as well as Shrikant, thanks very much for joining in. Well, let's start with you, Mayuresh. Just give us a sense in terms of, the overall texture of the market. It was a mixed day. Bank Nifty was resilient, but broader markets weak.
Afternoon, Ekta. I think the market is trying to take the RBI policy in its stride. Obviously, some participants in the market were of the hope and the opinion that a rate cut might come through. But looking at the statements, it seemed hawkish. But again, I think it's largely going to be data dependent if you read between the lines. And therefore, I think the markets will gestate what the RBI has probably done today. And obviously, I think the bigger event to comprehend tonight is what Trump is going to do with the accelerated or imploded tariffs on top of what he's already implied or levied so far. And therefore, I think the market's just in that wait and watch mode right now to see how the events are probably shaping up specifically in terms of Trump tariffs.
12 a.m. Eastern Time or 9:30 a.m. Indian Standard Time. That's tomorrow morning. The 25% tariffs come into effect, and plus the penalty, of which we don't have any details. Shrikant, just a quick word on the market technicals. We've been grinding lower, but we still managed to hold on to Friday's intraday low. Does that give you comfort for a bounce back, or do you think that's likely to go?
Afternoon, Rima. Afternoon, everyone. Say for Nifty, it is sitting on the weak note. It is finding difficulties to sustain at higher levels. In fact, in last 3 days, whenever the market tries to move higher, we saw good amount of sell-off in the market. Today also, in the afternoon, it was around 24,600, 640. But from there, all the way again, it came back to the lowest level. So in case if there is any like specific news flow, negative news flow, then in that case, we can expect a quick jerk in the market, the way we saw in the month of April. Similar sort of activity is not ruled out. The reason is because traders are completely frustrated, investors are cautious, and FIs are completely short in the market. So there is no room for the market to like sustain at higher levels. So something comes really positive for the market, then only we can expect a quick recovery, or something comes we can say unexpected thing, then only we can see a quick recovery in the market. Otherwise, in the absence of that, we can expect a gradual decline in the market, and on the dismissal of 24,450, we may even see the levels of 24,100 or 150. So broadly, I am of the view that we need to be careful in this market, and better if we be more on the stock specific side.
Okay, all right. Well, thanks for that. Moving on, the Reserve Bank of India today kept the rates unchanged as widely expected, but the tone of the policy turned out to be more hawkish than the market expected, with the RBI forecasting of 4.9% inflation 1 year ahead and thus removing chances of one more rate cut. Lata's here with the editor's take. Lata, over to you.
The Reserve Bank didn't cut rates as expected, but it shut the door on hopes of a cut in the next policy by forecasting the 1 year ahead inflation, that is April-June 2026 CPI, at a huge 4.9%. So if rates are to be fixed looking at the year ahead CPI, there is no scope for a cut, Reserve Bank seem to be saying, because inflation is going to be much above the mandated 4%. Equally, the Reserve Bank seemed to say poor growth isn't an excuse to cut rates. It retained the current year's GDP forecast at 6.5%. When I prodded the governor about the tariff impact, the governor said Reserve Bank brought down the growth forecast from 6.7 to 6.5% in the previous June policy, primarily to account for the global impulses. So clearly, no further cut in GDP. This led to the yields in the market rising. However, I just want to leave my personal impression from the press conference. My impression was that the governor on 3 separate occasions in the conference said that the RBI will monitor the macros on a policy-to-policy basis. That was his quote. The MPC will take a view meeting to meeting, he said in response to another question. And then he said the MPC meets every 2 months and will consider all scenarios. 3 times. So this gives me the feeling that we can't rule out a cut maybe in December or February next.
Let's get to the earnings then. So the 2 big ones, Bajaj Auto and Britannia. First up, let's talk about Bajaj Auto's numbers. Look fairly lackluster. Sudarshan joins in with the details.
So it was a muted Q1 for Bajaj Auto, and even the expectations were muted. So 2 major highlights of the Q1 FY26 earnings were, first, average sales realization, basically we call it, it has increased by more than 4% against our expectation of 1%. Now, if you remember, volumes were up just 1% both year-on-year and on a sequential basis, and that's the reason we were expecting that revenue will increase by just 1 to 2%, but company has reported an increase of more than 5% in revenue and almost came in line with our expectations. Company has reported margin of less than 20% after several quarters. It has come at 19.7%, but our expectations were 19.7% as well. So there also company has managed to meet street estimates. Now, what about the going forward? Because more than the Q1 FY26 earnings, this time what's the important for two-wheeler companies is the commentary, because festive season is approaching, and if the demand, company says that demand is expected to be strong, it will be taken positively. In one segment that company has been focusing is 125cc plus segment, and its commentary company is saying that it has been gaining market share. So overall, it was a muted Q1, but it has managed to meet street estimates.
Okay, all right, Sudarshan. That's on Bajaj Auto. Thanks very much for that. Vinny is now here to tell us about the FMCG major Britannia and what they reported. Vinny.
Hi, so Britannia also a weak, actually a mixed set of numbers is what we could call it in Q1 FY26. Now, while revenue growth was approximately in line with what we were expecting, came in at 4,622 crores, which is almost a 9% growth on a year-on-year basis. The miss came in on the volumes front. The volume growth saw a growth of only 2%. The poll was of around 4 to 5%. So big miss in terms of the volume growth for the company. Now, margins, that was also impacted. Higher gross margins is what came in for the company. Gross margins saw a decline of around 310 basis points on a year-on-year basis. Other than that, in terms of overall operational performance is not anything good. So overall, that impact came in on that operational front, miss in terms of volume growth for the company. The commentary that came in from the management, they said that they are seeing some green shoots and some uptick in terms of consumption, both in the rural and urban areas. So that will be interesting to watch out for in Q2, while the focus for the company remains on sustaining this healthy growth while protecting the margins. So important will be margins if they are maintained at these levels. But this time, there was a bit of a miss that came in on the margin front as well. 17.8% was the expectation. The margins came in at 16.4%. So mixed performance, revenue was in line, but margins and volumes were a miss for the company.
Thank you. Shrikant, Britannia's chart after the 4% fall, what's the setup?
See, here it is very clearly heading downward. The stock has made a double top sort of formation close to 5850 sort of levels. And from there, it is falling vertically. So the next level to watch out for would be somewhere close to 5,000 or 5,100. I think in case if there is any rebound because of any reason, we should look for reducing positions from Britannia.
I think they had a conference call and they kind of said that commodity cost relief from palm oil duty cut, etc., will support margins from Q2. So one of the concerns was margins. The second one was on volumes. But it seems like in the conference call, they spoke about some margin relief.
Okay, well, talking about conference calls, we did have Divi's Labs, which was in focus on account of its numbers, as well as its conference call, which was held during market hours today. Divi's Labs, the stock ended lower by around 4% The revenue was in line with expectations. It was up around 14% in terms of revenue, margins at around 30.2%, and a profit of around 545 odd crores. What did they say in terms of a couple of key takeaways? They are seeing some amount of price pressure in generics, price pressures due to factors such as the geopolitical situation globally. Every brand, according to them, has its own strategy. They will go along with what the brand requires. They were referring to valsartan, the heart drug, which did go off patent in July and saw additional competition. Right now, they're not clear in terms of what the tariffs could be and whether or not they could be on intermediates as well as APIs. Interesting takeaways coming in from Divi's, but no specific reason on why the stock could have been lower by around 4%. Mayuresh, do you look at the stock?
Absolutely, Ekta. And again, I think it was a marginal miss on the margin front. Having said that, I think the Trump rhetoric when it comes to pharma as a whole, where he's saying there's going to be a marginal tax and he's then going to ramp it up to 150 and then 250% over the next few years. I think that is what is creating a scare across the pharma universe, whether it's branded generics, whether they are CDMO players or the likes. And this uncertainty is something which will have a deep impact if it's taken forward, both in terms of pricing, both in terms of new product launches and the likes. So I think it's more a rhetoric in terms of the global uncertainty related to pricing. However, I think in terms of core numbers itself, I think they were not a bad set. I think it was a miss, but not a bad one.
Let's get in a handle on some more Q1 earnings. Transrail Zinka rallied on the back of a strong performance. Concor was a miss. Gaurav joins in with the details.
Nilesh, in today's trade, we saw a few outliers. And first, let's talk about Translate. Now, this company actually reported very good set of numbers. Revenue increased almost by 81% on a year-on-year basis. We saw EBITDA increase of around 66% on an absolute basis. And that is the reason why when we look at profits, now they have increased almost twofolds. They have increased almost by 100% on a year-on-year basis. Let's not forget that company has also reported ROCE of around 27.4% in this quarter versus what we had seen as 24.7%. And after that, we saw a sharp rally here. Another stock to watch out was Zinka Logistics, because here also we saw a good set of numbers. Revenue increased almost by 43%, while adjusted EBITDA, now it increased almost threefolds from 12 crores to 47 crores. And this is a result why EBITDA margin, now that also increased to 36% versus what it was at 13% just a year ago in the same quarter. Profit increased almost by 18%, and company also mentioned that their revenue has increased almost by 2.5 times in the last 2 years. Next, let's talk about Concor. Now, we saw a weak set of numbers here, and the reason being that the volumes were weak, and at the same time numbers were also weak for another quarter. When we look at revenue, that increased just by 2% on a year-on-year basis. EBITDA, that declined actually by 2%, and as a result we saw margin fall as well. And when we look at profit, there also we saw a muted performance, just 3% increase, and after that we saw there was some kind of disappointment from investors, and stock also actually got affected and was in red today.
Okay, all right. Well, management retains guidance for Concor. Shrikant, do you have a view on the technicals of that stock?
Yeah, on technicals, if we go through with its technical pattern on long-term charts, then it is showing a lot of weakness. It is not finding any important, it is not holding on any important support levels. And whenever there is a sell-off in the market, we see deep sell-off in this particular stock. So it is relatively underperforming to the broader pattern of the market. Today also, after the result, we saw a good amount of sell-off, and it has broken the important support levels, which was around 570. So based on its technical formation, I think I am of the view that the stock is again heading for the levels of at least 500, and in the worst case scenario 480 or 485, which was its previous lowest level. So very high chances of hitting previous lows if we consider Concor.
Mayuresh, you were earlier telling us how Transrail Lighting looks very interesting. The entire business model, but you still don't own it on your portfolio, or you're not recommending a buy. When does it become a buy?
So I think we'll wait for the signals to come through, and obviously the signals are right there. Our own sense is that it is attractively placed even at this juncture, but I think if it declines, I think that will be a good opportunity. As I said, I think integrated facilities, 4 integrated facilities that Transrail manages, numbers relatively in the first quarter on an absolute basis, 200 crore EBITDA. Last year, on an annualized basis, they've done almost 650 odd crores. So to that extent, if they're able to replicate this performance every passing quarter, I think there can be significant amount of growth, as I mentioned, in excess of 25%, both on top line and bottom line, is what we ideally seek. So I think today's move was huge, and therefore, if the stock does come back, pull back, I think that will present an opportunity.
Okay, all right. Mayuresh as well as Shrikant, thanks very much for bringing in that perspective. We need to take a short break, but up next, we'll get you the top corporate voices and the key market events to watch out for. Stay tuned.
Welcome back. You're watching Markets Forward, and now let's tell you the corporate voices that we had today. So first up, NSDL made its debut on Dalal Street. It was a 10% premium against the issue price of 800 rupees. The management was on the channel earlier, and they spoke about increasing the tech outlays in FY26. They see an opportunity to invest in automation. They will also invest in customer experience. They're focusing on improving services for technology and expand the tech-based access.
Next up, Prestige Group Management said that average realizations went up due to higher pricing in Bengaluru and Mumbai. The management added that demand was strong and that their RBI's rate cuts have helped increase affordability. Also said that projects with a GDV of 42,000 crore rupees would come up in the next 3 quarters, with several launches also lined up.
PVR Inox. Stock was a bit subdued despite the numbers being okay. The management said they saw the highest food and beverage spend, F&B spend, per head in Q1. That's close to about 150 rupees. They also added that content across languages is doing well. Occupancy, though, in Q1 was just 22%.
All right, and before we wrap, let's bring you some key market events to watch out for. Gaurav is standing by.
Well, yes. For tomorrow, the biggest key event to watch out for is the Trump tariff. Now, remember, the reciprocal tariff extended deadline is over. And from tomorrow, India will be applicable for around 25% tariffs from the USA. Other than that, Bank of England, now there also we will be watching out on how the rate cut decision is going to be, because they will hold a meeting and they will decide whether they're going ahead with the rate cuts or not. Other than that, there are some global earnings from Siemens AG, Sony, Toyota Motors. These are some global stocks that we will watch out for. From Indian point of view, we have some companies who will be on our radar on the back of the earnings. We have got LIC, Biocon, Godrej Consumers, HPCL as some key companies. And other than that, we also have NLC India and Apollo Tyres. From earnings, we also have some of the important events which are going to happen tomorrow. First, let's talk about JSW Steel. Now, Supreme Court has recalled the order for cancelling JSW's 19,300 crores bid for Bhushan Power's resolution. Now, there will be fresh hearing tomorrow, and on the back of this, we are watching out on this counter. MSCI India reject will also happen tomorrow, and according to JM Financial, there are a few stocks and candidates who can get added in the likes of Swiggy, Mazgaon Dock, Hitachi Energy and Marie Energies. Together, this can actually attract around $850 million as per JM Financial. And lastly, let's also focus on JSW Cement, because this company will come up with the IPO. They are going to raise around 3,600 crores. And remember, the price band is going to be between 139 to 147. So definitely, all these stocks will be on our radar tomorrow.
Valuation is approximately 20,000 crore rupees, and currently it's the 9th largest company by way of capacity in terms of cement capacity. Thank you, Gaurav, for that. Well, that brings us to a close in this edition of Markets Forward. We'll be back with more news and updates.